Twitter, through Instagram.
Too many trades to go over. Whoever's on the call, thanks for coming on the call. We're going to quickly go over all the trades from July. July was a very successful month, easily over 20%. This might take a little time, but you're going to get a lot of sauce. So grasp this as best you can. Put any questions you have in the chat, and then we'll get to them later. So we are going to start with the first trade was GBP AUD. We do a scalping strategy, basically 15-minute, 5-minute, even down to the 1-minute. So GBP AUD, we went long on July 4. Let's go to July 4. Cool. GBP AUD, July 4. I must have rolled this up here.
Recording in progress.
Entry here. So that's gonna have to go. On GA, very simple. We just caught a bounce right in here off of this zone, spiking the lows. I mean, you can see this trade shot up really nicely, getting in anywhere in the zone off of any of these bullish candles, putting your SL under that spike there. Even there, it's about 30 pips. Riding this to previous highs over here. So there, over 120 pips there, over 3%. We really only shoot for about 3%. So would have gotten out of the trade around here, even at 90 pips. This is a nice 1 to 3, and you can see obviously it went for a total of 5% on GA. Then we did GA again. So there's not a trade every single day, almost every day. GA here actually took a little loss next, so it had the same idea with these lows here. We spiked the low, and in this area, I may have gone long and took a loss, for example, targeting back up to the previous highs. So this would be out 1%, whichever way you look at it, that's a 1% loss. We only ever risk 1% on a trade. So the first trade we hit on +4, our next trade we lost. So we'd be up +3. July 6th again, we were trading SPX. Not something we trade regularly, but the same thing was happening. You're gonna notice it's the same trade, just on a few different pairs, as it works on all pairs.
Recording in progress.
It's July 6th. So July 6th, SPX had a lot of sideways movement here, hitting these highs. So I was looking for a short. And if you were able to catch something like this, you put your SLs right above the highs and take it down in here. This would have actually been more of a loss because it doesn't even go to 1 to 3 here, even with this SL. So I'd mark that as another loss on SPX. Then we're going to go to AUD, JPY. All right, so AJ on July 7th, we went short. 19. Was it AJ? Yeah, this was not a win. This was a different setup there. Same thing here with AJ. I already have some markups, but I'll just start it over. So we had nice highs here. We had some lows in here. So we're just trading in the zone, right? It's very simple. We saw a breakout here and would have went for a short, but it blew above. This long right here would be ideal in here as we broke out and retested back. And then this zone held very strong. So any longs from here, this gives you your SL. This previous low, this spike to the low is an SL, and then riding it to the previous highs to the top. And obviously you would have had to hold it for a little bit longer to finally hit at least 1 to 3, which would have gone into the next day into New York. So AJ was a win of 3%. July 7 also on USDJPY. USDJPY going to the 7th. A lot of US pairs work very well with this. So July 7, UJ. Around 2:30 in the morning is when we took our trade. Okay. Broke to the high and short. Same thing here. These highs get taken out by this up here. And in here we're shorting. So in here we're shorting, our stop losses go above that. And there's 1 to 3.8. We would be aiming for these lows in here, but if we can already achieve 1 to 3 right here, we're done. 1 to 3.8, so we would come out at 1 to 3. And we're done. Next trade on July 7th with GJ. So on the 7th, am I on the right time? Yeah, Toronto. GJ after 3 in the morning. Let's get into the 7th. Right here at these highs. Spike this high and short. Some trades have very tight stop loss, like that's a 1 to 4 right there. So 4%. July 8th, EG. Okay. Same thing here with EG. up in here. This was pretty simple to find off these highs off of this. Nice bear candle. Put it above. Down to these lows. An easy 1 to 4.5. Obviously, it went much further. Could have earned 10% there. It's all about your trading plan. You have to have a trading plan. AG was a win. Easy 4%. Also on the 8th, we have AUDJPY. We'll go to the 8th. This had a big spike high from these here and then tanked. This would require a lot of patience that you have to learn to have just from being in the market. It takes time, but yeah, you would get in. Your SL would be around there and you take it to these lows. It's an easy 1 to 4.3, 4.5. Could have even hit 5% easily here on this trade. AJ was another win. Risk up to 4%. Next was July 11. So that was that first whole week. Let's go now. The next week, July 11, Euro GBP. Let's remove drawings. Euro GBP on the 11th. Sure. EG. Hard to see it. So here's Euro GBP on the 11th. We're in some clean consolidation. And this gets broken. And we're looking for these lows at the bottom. This high was spiked here. And then we can see the turnaround candles reversal and it tanked. You can get in off any of these candles. If you're watching it live, ideally you're going to get off of this candle or even this candle. And your SLs go above there. And you're riding it back down to the previous zone area. And there's our 3%. I know I got in higher off of here with my SLs like this. So this is an easy 4%. Take any notes, and if you have questions, I'll go over after. This is how simple that I trade. Coming out of midnight, getting into London session. This is around just after 2 in the morning. This is East Coast time. And then as London hits, it drives our trade into profit. So it's a pre-London entry here, and it's a very clean trade. 1 to 4. Next trade would be the next day, AJ. Is this on your phone?
Mm-hmm.
What does it look like on the phone? AJ. Okay. Yeah. Who's not muted?
I'll go in there. I want to go in there. How are you?
If there's a way to mute everybody, we need to mute everybody. Cool. Okay, July 12, AUDJPY. We were looking for a long, it was an earlier trade. July 12, AJ on the long. Oh, that's cool. Here's the spike low. Here's our highs. This obviously took time to play out, but you can see it's an even style of an inverted head and shoulders here. Head, shoulder. So you need to learn to train your eyes to see these types of patterns, head and shoulders or inverted head and shoulders. At this low, it's a really clean trade. Ideally, you'd rather wait for the head, the ultimate spike. That gives you your stop loss. Any of these trades in this area would be ideal. Come back to the high. Would have had to wait a little longer till up here. And it pops up easy. Plus 3%. July 13, gold, next day. Get all the drawings off. All right, 13. Holy, gold moves pretty wild. Didn't catch this massive move, which came into New York. I don't like to trade in that. Was trading in London, only really trading out of Asia into London. There's all these lows here, even from there, which is relevant. Literally went in off of this tap down in here, just around 2:30 in the morning. Stops under. There's an easy 1 to 3% right there on gold. Trading gold in New York can be risky. As you can see, crazy movements like this happen. And if you don't know what you're doing, it will take you out both ways. We're looking for quick scalps in the market to get in and out. That was a nice trade. That was a really nice trade. It's not always about catching these massive moves, right? If we can catch little hiccups in the market and catch anywhere from 3 to 5%, that's a lot of return. Think of that on $1 million account. That's a lot of money, right? People think small mindset because maybe they're trading with small money, maybe a few thousand, even 10,000. Once you're thinking your mind of growing 7-figure accounts, this is a lot of money. On to the next day, GBP AUD, July 14. July 14. If any of these trades hit a loss, that's it for my day. I'm only looking for one trade for the day, really, to either be a win or a loss, because there's going to be another trade tomorrow. You don't want to get caught up revenge trading or doing anything like that. It is not good practice in the market. Looking for the 12. Cool. Here's the 12. What am I looking at? GA. Bank high still low. 1, 3, 4. Between 3 and 4. That's a low spike. So GA on the 12th was more downtrending. We stopped here. And I saw these turnarounds. So price stopped in here. I may have caught a really tight trade in this off these dojis. There's 2 dojis here on the 5. If you can see that, I'll zoom in. Right? You need to know your candlestick patterns at the right moments because you can find dojis anywhere in the market. You need to find them at the right areas where you can capitalize. It doesn't look like a big move, but when you catch it nicely, that was an easy 1 to 5. I know I only took 3% because I'm only going for a lot of 3% trades. It's part of my goal, but that was another win. 15th, moving on, I was looking at GJ. $15. That's a different trade, different day. I'll get into that when I'm there. I'm on the 15th right now. Here it is. I already had it marked. So same thing here with GJ. We're spiking these highs, spiked it as a fake out, came back as a retest in here, and I shorted it. It's earned 1 to 5%. Obviously, the goal is to come down to here, but if you can hit your percentage, you don't have to hold your trade, because you'll see if you had your TP somewhere here at this other low, it might have just missed it here. But that would have been, you know, 1 to 6. I'm not looking to make 1 to 6. I know how to make trades of 1 to 6, but with this strategy, I'm only scalping about 3%. On this trade, I can see I hit 5 because we kept breaking to the low, to the low, to the low. After 5%, I'm definitely closing and taking my profits. I'm out of the market. My goal is to get out of the market as fast as I can. I'm not looking to stay in the market all day and night. July 18. AJ Long. July 18. Chat. Yeah, I do almost everything on the 5-minute. I'll look on the 15, 1 hour, 4 hour, just to maybe see some structure. But then when I'm taking entries with this strategy, I am on the 5-minute. So AJ on the 18th, let's see what I saw. Excuse me. This is really clean. This is a really clean trade. Again, requires patience, but you can see we're in really good consolidation here. Price is moving sideways, really nice. Here it broke below. Time is up. A lot of trades I notice happen after 2 in the morning, pre-London. London's 3 in the morning over here. I'm from Toronto, East Coast time. But we can see here, right here, price spiked these lows to fake people out. And then all these dojis, look at all these dojis. 2, 3, 4, 4 nice dojis here on the 5-minute. Get in on those. Put your SL underneath it. Right? It's a scalping strategy. Yeah, that's about a 6 pip SL. And you can see your previous highs. That's where you're looking for your TPs, or as soon as you'll make maybe 3%. So for me to go to these highs with this trade, I'd make 4%. So my TP doesn't have to even go that high. My TP can go here and I'll hit it in minutes and I'm done. That's all I really need. If most of the times, almost always, it will come to the high. So you could at least at this point secure some profits, put your SL in profit, and have maybe a second TP up here. As you can see, it goes there. But it's just a nice, simple scalp. And we're done for the day. Your goal is to be done for the day as fast as you can, even within an hour. This only took minutes. That's a really, really clean trade. That was AJ on the 18th. That was an easy 4%. Now we're on to July 19th, EA. So let's look at EA on the 19th. I know I'm going a little fast, but there's a lot of trades. Again, if you guys have any questions or notes, write them down and I can go over it after. Technically, we're almost done the month. All right, here's the 19th. I already have it marked up. Cool. Well, let's remove it and start over here so you can see what's going on. So the 19th, you can just always look to your left, look previous. You can see a lot of taps here to the low here. 1, 2, 3. So extend it into your new day, because into the 19th, right out of midnight for me here. Spike these lows. And now we're just getting all these railroad patterns. All in here, in this zone, you're looking for an entry. Any of these bullish candles here, 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 even if it comes back down, get it here. And just keep your SL right to him. He's the lowest. There's a lot of highs to your left, so you could have really had strong TPs up here. But again, I only need 3% and I'm out. And that's it, and I'm out. You can see it flies. If you held for up here, see, sometimes it doesn't always go there. Most of the time it might, but if you held this, you're stuck in this trade. I hope you'd maybe secure some profits. But a nice scalping methods will give you a good 1 to 3 or 4 almost every time. So that's why at 3%, 3.5%, I'm out. It's easy. I'm done in minutes. That's EA. So another 3%, I'm out. I'm done. July 20th, we looked at gold. You can see I'm really going through a lot of different pairs as this happens on all pairs. You can focus on one pair. You can focus on a small handful. Once I find a pair that is setting up the way I like for a trading session, I'm only going to commit to that pair and I'm not going to look at 4 or 5 other pairs. I'm going to find the pair that makes the most sense for that trading session. And that's all I'm going to trade. So for gold on the 20th, same thing. I'm looking for these highs to get touched either up here like this or up here like that. And then back down to some of these lows in here. Some of these trades are really tight, really small. That would only be 2, so it'd be more so in here. And then obviously it tanks, right? I didn't hold through all of that. You could have. Again, I'm only looking for, that candle there all did it. 1 to 3. So there's gold. 3%. And EG. Really like Euro GBP. Has a lot of good movement up and down on the smaller time frames. 20. Cool. Going to the 20th. Nice, we went long. Yeah, I can see these spikes to this low. Whatever, that's fine. Same thing, these lows get spiked out and we see a big W here. Second leg you want in, always on a W. Tap, tap, get in. SL's under those lows. See, again, you'd be targeting up here maybe. In this instance, it didn't really go all the way up there. So I'm only going to mark for 3%. And I'm out of the trade. Boom. These wicks, make sure that it clears you. Maybe you have spread or something. And that's your trade. You're in and out. You're in and out. GA on the 21st. Cool. Only English, my brother. I don't know what this says. SD Romaine. 21st. Cool. So long. This is nice. This is clean. So here, a lot of consolidation. Right, price is bouncing. Right in here, price spikes under all this. And again, we look for a nice doji, some bullish candles, another doji. Somewhere in here, you've got to start looking for your entries. This spike to the low will act as an SL. Anywhere after all this, you're in. See your stop loss is about 7 pips. If you want a whole number, put it to 10, right? 10 pip SL.
Yeah.
That's a 1 to 5. Again, I'm only looking for about a good 1 to 3. and I'm out the market quick. You held it up to the high there. It did come to this one. You'd reach almost 6%. Here, easy 1 to 3 again. Boom. That's GA. 3%. Now on the 22nd was EU. I think this was a really nice clean trade. July 22nd. Yep. There it is. All right, let's remove the drawing, start it over. So this is super clean. My thing's dying. 1 second. Cool. Okay, so same thing here with EU. All these lows get spiked really clean. Right in here. And these highs. This was also another spike high, but I'm not trading that time. I'm watching this after London. There was news actually, I remember. And the news would have faked out a lot of people because this shot low, broke all these lows. People would be thinking sell, 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 sell. But I knew it as a reverse, so I saw these lows get tapped up here. Price here shot really clean. This was a really good trade. Like this. Yeah, but then the tools don't work. So that was a really nice trade we hit on EU. Again, only looking to hit 3%. Not trying to be greedy and hit 10% in a trade. I know how to do it. I just don't do it often. Has to be super clean. On to the 25th, EJ. This was a great trade. EJ. Cool, cool. EJ on the 25th. Check this out. As I see here. Same thing right there. These lows are spiked and it bounced right up. Coming up to these highs. EJ. Off of these nice bullish candles, this would be your SL. And again, back to these highs. Easy 1 to 3. EJ 3%. GA on the 26th. Almost done. GA on the 26th. This is a trade that actually came out of London into New York with these lows here. A nice W pattern here, spike these lows. And that's how you get your second leg entry, stop loss under the W. And again, easy 3% right there. That's GBP AUD. I journal my trades by writing them down. I have a book. I mark them all in my phone. I have a whiteboard I mark all my trades on. So I'm writing my trades like 3-4 times everywhere in front of me. So that's all I see. So there's GA scalp, another easy 3%. July 26th, USD CAD, super clean pair, USD CAD. Always get really clean setups with USD CAD. I'm going to take these drawings away. So July 26th, we hit USD CAD. Oh, wow, that's so clean. I love that. Okay, there, I can see it already. Here's a nice example, look. Okay, here's live price. This low is broken, so it's no longer very relevant, but this low now hasn't been broken as it bounces back up. So now into the future, we draw it. Price comes back into here. Here, let's go back even further. So look, price broke this, which is a fractal break low. So now we draw our line from this low into the future to wait and see what happens. So price will come back and we see it start to respect it, right? It's respecting this low. So we're going to start to look for entries in here, but we need to be careful. There's going to be a stop hunt right there. There it is. That's your stop hunt, a railroad. This is a clean railroad indicating price will come back into this zone. So you can basically get in almost right away as that being your SL. Or you can see 50% retracement of this railroaded bullish candle because we're looking for a long. So we're playing off the bull candles, not the bear candles. And I know I got my entry in here somewhere and it flies. Yeah, somewhere in these pullbacks, I'm looking for entries. To this previous high would not be enough for a 1 to 3. So we would be looking for something around these highs, right? And that would earn you, you know, 1 to 4, 1 to 3.99, easily 1 to 4. Bang. That is a very clean trade. When you see something like this, get excited. This is very exciting. This flew in the air. Like this was definitely a really good trade if you held it. But again, I'm not looking to be greedy. I have a weekly goal that I follow, very structured. Keep it simple, right? And you could ask the question, well, would we short from these highs here? Well, no, because price is just blowing above. Price isn't stopping here, turning around here, giving us any turnaround candles, reversals, nothing. So it's just continued long. Here, which I explained was very nice. Price stopped, slowed down, pushed back up, did an impulse to fake out people who were going to short, and then turned right back around and went long. This is a signature trade. Pardon? In here. Look again, guys. You've identified this consolidation works every time from the 5 minute. Yes, correct. So look, you have your lows. You're waiting for your lows to get spiked first to fake people out. Let me slow this down a bit. Right here, people are getting faked out thinking this is the next break below, and they're going to short it. Right? People are going to short it. But once we get the railroad, boom. Anywhere now, once this closes, because it's a 5 minute. So once that 5 minute candle closes, any of these candles, as best as you can, into it. See how this wicks in? We're wicking down. We're wicking down. Just start getting an entry in here. Even if you have to come in on the 1 minute, you can. But start throwing your entry in here. Even off that. Ideally, you'd rather it be off of a bull candle, but this is too high. We wanted it a little bit lower, right? We wanted a little bit lower. See how that came low, turned around. You could enter off of once this candle closed, not the big one, the small one. And same thing, your SL's got to be around there. Because that's the impulse. If it is going to short, then it would break this and fall a lot. It would tank. But we're seeing it as a reversal. And that's live price. You're done. So you need to wait for this to happen first, this railroad, for example, to confirm that price is not going to fall. Price is coming back up because of this railroad. This is a fake out, right? These happen all the time, fake outs. You could have got in off of this nice candle here if you wanted to. You would still hit your take profit. Or if you got a little patience and got it on this one here. It takes time because sometimes this could just fly up really fast and you miss it. So you do want to get some entry in. And there's your TP, and as you can see, it blew above. So even if you got in really late off of something like this, if you got in really late off of this big candle here, this nice bullish candle, even if you get in late off this big bullish candle, you know, you can adjust your stops where it doesn't have to be so deep. It can then go after these guys here because now we're really breaking above. And same thing, if you're just measuring for 1 to 3, it easily hits it. The fake out is usually quick and it'll break the previous lows in consolidation. When you see universal candles, that's how you know exactly. We don't measure pips, right? We measure percentages. Congratulations. We are not measuring this as pips. We're measuring it as percentages, right? We're always trading to earn a percent. So in every example, we're trading to earn 3%. So with this pair, again, it would change. If you got in up here, right, with this SL, you'd have about 6 pips. If you're looking for something very simple and generic, same thing, you'd maybe look for something that has about a good 10 pip, but you have to know your pair. Because with this pair, 10 pips, it would have looked nice. You would have definitely cleared these lows. And then for 3%, 30, you know, very simple math. So there's 30. And here we're a couple of pips off there, the 3%. So you'd have a 10 pip SL, 30 pip take profit. Some SLs can be shorter, but if you really wanted to just clear these lows, which is smart, this trade would still been a great success. That's just a zone. It could be drawn as a box. It could be drawn as just a straight line. I like zones because I'm trading this manually. So I am just looking for the zone. Another way to see it is sometimes to go to the line chart. If you're looking for just a simple line to see where those lows are, well, you can use the line chart. And then the second that breaks, this is a lot of sauce. If you guys don't understand this, use your line chart. Look, tap to the low, broke it. Came back up and flies up. So it doesn't have to be a zone. It can just be a straight line. Same thing with these highs here. There they are. Tap, tap. This is money. Frame this, save this, draw this, copy and paste this. When you see this or vice versa for the short, nice spike, and then price comes back in. With the candles on, obviously we see a nice railroad here. Price comes back. This was UCAD on the 26th. This was an easy, you could have hit a lot of percent on this trade. Gold, looking at July 27, a little bit of gold. Go away. July 27. Okay. Gold's really tricky sometimes. I don't prefer to trade often. If you find a nice setup, it can play out nicely, but you gotta have a nice tight SL to get out if it goes crazy. Gold can go crazy around 3 a.m. Yeah, like it looked like I was actually scalping something like this here. Because price broke above this and then turned around and didn't fall well. This was not a win. Take losses, not many losses, but we take losses. You have to take losses. You know, even if I was shooting for my 1 to 3, which would have been around down there and maybe a little lower, see to these lows. Would have broken it. But price shot up and we took a loss. Gold was a loss. And it happens, you have to take losses. It's 1%, it's nothing crazy. And then the next day, the 28th, EG. Really like Euro GBP, Euro AUD, GBP AUD, USD CAD, Euro USD. All right, the 28th of EG. Here it is. 28th of EG. Definitely a tricky trade. This was a good fake out with this wick. There's a lot of money with that in there. And then close. This was a really good fake out because it was just a wick. You're looking for something more where it breaks above, comes back down. You need short in here. And this had a really good short, even off of before the big. 3.5. Again, we're only looking for 3%. Boom. Euro GBP. And then the last trade was USD CAD. This was super nice. USD CAD. On the 29th. Same thing here with USD CAD. All these lows get spiked. Yeah, around 230. All this is getting spiked, and then we're having, this is one of my favorite candles here. Style of hammer, inverted hammer, this candle right here. These candles swept these lows nice and fast, boom, boom. And then this candle here popped it off, back in. So now, price shot down really fast. Any of this play in this zone, I'm looking for an entry to come long. And this down here is where I'm looking to make an SL. If you could have had patience for a doji like this, that would have been a really good entry, or the next candle would have been a really good entry, or somewhere within there. Even after spread, your entry is never perfect. It might be higher, right? But that's where your SL is. This spike low, and then you see price pushing back up. That allows you to have a stop loss. That gives you your stop loss, right? This is naked trading. You can see we're not using any indicators or anything like that. We're just reading pure price action. That's all we're doing. I do like to go back to the line chart just to see how price is moving, and you can see it's tapping, pushing up, tapping, pushing up. Right? It's not breaking that. This broke these, and that's why that's where your SL goes. And then the same thing, you're looking for those other highs. Well, here's some highs up here. And if that's where your TP is going, you know, there's an easy 1 to 3%. Sorry. Even if your entry's late, even if your entry's late. This is a nice trade. This trade flies, you know, if you got in really late, you're good. This really, really went. These were some higher highs up here. It never reached. You know, you're never looking for like an ultimate high because sometimes it won't hit it unless a high like that would have been a little bit better. But if you were thinking your TP is going to come all the way up here and you're like, oh, I'm going to make 8% and you don't, you know, it's not always realistic. You have to have a lot of confirmations to think I'm going to make 8% on a trade. 8% is a lot of money. So again, a real nice trade would have been back to these highs here because it could have still bounced and fell, but this gave us at least 3%. Broke it a bit. Nice. 3%, I'm done for the day. 2 successful trades in a week and you're up 6%. I'm done for the week. I'm only looking to make 5% in a week. Again, we're not trying to be greedy here. The market's never going anywhere. We're trading off of a type of supply and demand, right? We're looking to spike it high or low, looking for a bounce back. We need to understand our candlestick formations. I can see that I might make this look very easy. It's a lot of years of practice, but you need to make it simple for yourself. You need to find anything that works for yourself, and that's the only person that matters, right? No one else is trading your account but you. Yeah, I know all about fair value gaps and stuff. We're not trading that here. Sorry. We're not trying to do all these complicated terms, fair value gaps, consolidation voids, blah, 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 all this crap. Keep it simple. Keep your trading simple. Don't get confused thinking you need some crazy complicated strategy to be successful in the market. The more simple your strategy, the better. This is an extremely simple strategy that I trade. I've been trading for many, many years. Literally a long time, been in the market since 2013. So yeah, this is a simple strategy. And these are all our trades that were taken in July. So in July, we really only had a couple losses. One loss there, one loss there. 3. Four good losses. 4 good losses. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 13, 14, 15. There's 22 wins and only call it 4 losses. So bare minimum, we're hitting 3%. So 22 wins at 3%, that's 66%. Minus our 4 losses of every loss of being 1%. So there in July is 62%. And you saw on a lot of the trades, they went way higher than the 3% risk to reward. So I'm just calculating this clocking out at 3%. So 62% in the month of July. That's a lot of return. There's no bank on the planet that will ever give you that. So you need to master this skill set because you can write yourself your own paychecks once you learn how to actually trade properly. And break your trading up into weeks, right? Like, again, my goal is to be done as soon as I can be. So I'm going to look for a move like this in the market tonight around London. And if I can bank a good 3% on a trade, I'm done. I'm closing my computers, my phones, my screens, everything. I don't care what else happens in the market. I don't care if I catch just this little piece. If I come back to my screen and I'm like, wow, it flew up. I could have made, 7%, but who cares? That means I was in tune with the market. I was correct. I got my scalp. I'm good. I don't need all this extra. I know how to capture it, but it just requires a lot of mental power. And like I said, my experience in the market, it's a lot nicer to just get in and out with the bag and close your screens and tell yourself you were successful today. Wait for tomorrow. Tomorrow's a new day.